My name's Crystal Comber, and I'm with SlickTrade.net. In this lesson, Lesson 3, I am going to go over using the Fibonacci 50% method to enter and exit Forex price action trades. Before we get started, please feel free to pause the video and read through the entire disclaimer, but when trading any financial asset, there's a possibility you may sustain a partial or total loss of your investment funds. Trading involves a real risk of loss, and as a result, it is advised you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Past performance does not ensure future results. Using the Fibonacci 50% method to enter and exit Forex price action trades. In my previous lesson, I taught you how to enter and exit trades easily using the daily pin bar break method. I hope that you had a great week of demoing this concept and were able to easily include it in your daily trading analysis. Now, I want to introduce to you the Fibonacci Retracement tool and how to effectively use it and plan each day of trading ahead with set entries, stop losses, and take profits. Although the pin bar break method can be very effective, the risk to reward can be a big drawback when a trade goes against your favor. But using the Fibonacci Retracement 50% method, you can greatly increase your profits and lower your risk. If you did not tune into my previous lesson, please do so before continuing with this one. So, what is the Fibonacci tool? The Fibonacci Retracement tool is most commonly used among technical traders and is based on key numbers identified by the 13th century mathematician Leonardo Fibonacci. The Fibonacci is created by taking 2 points, such as a high and low of a daily or weekly chart, and dividing the vertical distance by the ratios 23.6, 38.2, 50, 61.8, and 100%. Horizontal lines are drawn to show the key support and resistance levels based on these ratios. Please refer to my post on this lesson for more in-depth information on the ratios. I do go into the Fibonacci retracement on the post, so if you're just watching this directly from YouTube, feel free to check out the post on SlickTrade.net and see a more in-depth description of the Fibonacci retracement and how those ratios affect the Fibonacci tool. Okay. How do you use the Fibonacci tool? To use it, you're going to bring up your MetaTrader 4 and bring up the daily chart. Click on the Fibonacci Retracement tool, which looks like this. It's a little button with an F on it with dots. Okay. The Fibonacci can be used on any time frame, but I am saying the daily chart simply because my previous 2 lessons on pin bars have been based on a daily strategy. Okay. So what you're going to do is click and drag from the top to the bottom of the pin bar. In this scenario, it'll be top to the bottom of the daily pin bar. The 50% entry, okay, limit and stop orders. Just like the break method, the Fibonacci 50% method requires you to set a stop or limit order. Okay, you want to refer to the previous lesson on how to enter these, because I did cover it in that. As you can see, the turquoise horizontal line right here is at the 50%. Hopefully you can see that. I know it's a little bit small, but it's as large as I could get it on this, or from the image. You want to select the 50% line for optimal results. And much like the previous lesson on setting your stop and limit orders, you would instead set them at 50% instead of the break of the nose line. Okay, we for the break method, you chose 10 pips above or below, depending if it was a buy or long position versus a short or sell position. And that break would have been 10 pips in this scenario, this pin bar. It would have been 10 pips above that break, okay, is where you would have entered. So if you can see, that's actually at, above 100%, all right? But you can get 50% more, actually a little over 50% more profit by using the 50% method, because you'd enter here you'd enter here for a buy instead of entering up here. So you see how much more profit you can get. And with these being daily, each one of these bars is a day. Okay, that's a lot of pips. Okay, this isn't just a 5-minute chart or a 15-minute chart or anything like that. So you can gain a lot more by using this 50%. Like I said, you can achieve more results, gain more pips per trade, therefore you're risking less to gain more. One thing to keep in mind is that the order may not fill every time using the 50% method. It does fill more with the break of the nose, but you also are risking a lot less and you're making a lot more using the 50% method. So I still would choose this over the pin bar break method any day. And your account will see it, it's going to see it over time. It'll see the profits that you make. Setting your stop loss and take profit levels. The rules for this are literally, they're based on previous support and resistance. If you refer to the chart, you'll see that there is one, obviously, stop loss level. That's the red level here. And then there's 4 take profit levels that I drew in. Okay. The turquoise level is just that 50%. That's your entry. Okay. You're setting your pending order. Excuse me, I'm sorry, I had a little brain lapse there. You're setting your pending order at this level. Your stop loss is down here, which is a previous support level. Okay, and then your take profit, 1, 2, 3, and 4. They are at previous resistance levels because it's a buy position. You see that? It's where price hits and goes back down. Okay, or where price fluctuates within support and resistance levels. Okay, and I'll show you a larger picture of the chart here in a minute, so you can kind of go back further to see that. Okay, to get the best results and the maximum potential pips and profit, if you have your take profit, when you enter in your pending order, if you have your take profit 1 set and your stop loss set, when the order gets triggered, if you're awake when it gets closer to take profit 1, what I would do is I would move, or I would change take profit 1 to take profit 2. Okay, and when it actually hits take profit 1, I'd move this stop loss up just under where that take profit 1 was. Okay, and let it hit take profit 2. Okay, so you're getting a lot more by moving it, and that's called a trail stop. And I highly suggest using a trail stop, because if it hits take profit 1 and then it heads up to take profit 2, but comes back to below take profit 1, or right at take profit 1, then you're going to break even. You're not going to lose or gain anything. Okay, but if it goes up to take profit 2 and then, you know, continues on up to take profit 3, take profit 4, you can really, you know, maximize your profits. You're getting all of this profit instead of just this. There's a big difference, okay, from here, or whoops, from here to here versus from here to here, okay? So let me show you. This is the same chart, but it's showing back further. And I just wanted to show you the previous support and resistance levels, okay? Let's start with the stop loss. If you don't know a lot about support and resistance levels, it's where price hits and comes back down, or it's where price hits and fluctuates within and then breaks, okay? So if you can see the stop loss here, price hit, well, actually, let's start here. Price hit, and it kind of came back down, formed kind of a semi-pin bar. It broke it, okay, and it came up to this level, which is actually the take profit 1, or close to it there, and came back, kind of fluctuated, hit again, broke through, went down, broke, headed up, okay? If we go, let's see here, back to here, price came up, down, up, down. See, it's hitting this level consistently until it breaks it, and then it actually goes up to this take profit 1. Goes back down, breaks it, comes back up. See, price is drawn to these. And these can also be referred to as magnet levels, okay? I was taught support and resistance, so that's what I call it. But I like the idea of magnet levels because price is drawn to these levels, okay? Like a magnet, it's coming to these levels, okay? It's fluctuating within, it breaks, it comes back down, okay? You can literally just make a strategy purely based on support and resistance because it's a good indication that, okay, it broke this level, so it's going to head to the upside. It broke this level, it's going to head to the downside. Oh, it's fluctuating. You know, it's a great entry and exit tool. So just something to think about. If you look at these take profit levels, look at this. Price fluctuating within, like I said. Price, it's hitting, breaks it, comes back down to it. Breaks it, comes right back to it. See what I mean? Take profit 2, same thing. Okay, right here. Hit, down, up, breaks it, heads up. Comes back down, breaks it, heads down. Okay, take profit 3. Hits it, back down. Okay, here, broke it, went down. Here, broke it, went up. Here, hit, went back down. Okay, take profit 4, same thing. Hit, came back down. Boom. Almost came up, came back down. Okay, so that's where I came up with take profit 1, 2, 3, and 4. If you aren't comfortable drawing in these levels, and they don't need to be exact, that's another thing. See right here, price, it went above this. Okay, it's not exact, right? Nothing is exact. It's kind of like trend lines and, you know, drawing those in. Everybody draws them differently, but it's all based on patterns. It's all based on where price is hitting and it's changing direction, or it's breaking and it's continuing in direction. Okay. So if you're not comfortable with that, then just do like a, you know, stick to a, you know, set like every 25 pips, you'll trail stop. Okay, so it hits 25 pips profit, and then you start trail stopping every 25 pips. Okay, you can do it that way as well. You don't have to be good at, you know, drawing these in, but it does help give you a good visual. Okay, And you can see here too, price hit take profit 2, didn't quite hit take profit 3, almost hit it here, headed back down to take profit 1. Okay, but if you were familiar with these levels, you would have seen, like, excuse me, that you could, what I personally would have done, I guess, is I would have moved my stop loss back down a bit, okay, and I would have, or I would have just taken profit, because it came really close to take profit 3, and then when it came back down here, you see, almost, it's like a semi-pin bar, okay? It's not like a solid pin bar to base your, like, Fibonacci on, but it's a great indication that, yeah, price is going to continue back up. And look at that, it does. Okay, so you essentially could have, if I would have been awake for this, I would have just basically moved my take profit 3 down a little bit, okay? Because it's just shy of it, all right? And then when I saw this candle form a couple days later, I would have been like, oh, look at that. I could re-enter this trade one more time. And look at that. Breaks through take profit 3 and doesn't quite hit take profit 4, but I would have taken profit there. But it does hit it the next day. So just another thing to think about as well. Another way to gain maximum profit from it. Okay? It's important. Now that you have gone through my 3 basic lessons on pin bars, you are fully equipped with a solid strategy to effectively trade them. There are many more ways to use pin bars, okay, and I will cover them in future lessons, but for the next few weeks, I'm going to focus on a few other lessons, a few other concepts, strategies, different ways to trade, both Nadex and Forex, okay? I want to keep everything broken down real simple so you can go back and really learn the lessons thoroughly before you move on to adding more to the chart or going crazy or anything like that, all right? I want to keep it real simple because a lot of you are new traders, and a lot of you also have been maybe trading for a long time, but you've been unsuccessful because maybe you haven't had a good strategy, or for most people, it's that you haven't been using a good solid trading plan and solid risk management, okay? That's really the key to being successful at trading, honestly. But this is a solid strategy that if it works for you, if you want to take the time to learn it, and it's something that you enjoy, it's a great one to have under your trading belt, okay? Your homework is to go back through the 3 lessons and make sure you're correctly identifying valid pin bars. Look back on your charts and honestly, just write it down on a sheet of paper or whatever and be like, yes, I would have entered that and I would have lost this many pips or gained this many pips, okay? Really look at it and see, like over the past month on these 3 pairs, I would have gained or lost this many pips. And then when the market is live on this upcoming week, demo it. Just keep on demoing until you have some consistent months where you're in a decent profit. And if you're not, continue to demo. If you are, in a good profit, then start trading live with it. But make sure you're using good risk management. And so this should be a great one for you, okay? I'm excited, and I will see you guys at some upcoming lessons. If you're interested in learning more great strategies, joining our academy, or checking out other free information on trading, we have a lot of free strategies excuse me, up on the website. And different lessons where you can learn things. Go to sliptrade.net, and we will see you there, okay? You guys have a great one, and I look forward to seeing you all soon. Feel free to share, like, and comment.